Good afternoon, this is Brad Dennis with BIS Commodities with your weekly wrap-up for the second week of March. Today we saw corn and beans kind of get a little bit beat up, down testing lower end of the range in corn. Beans actually taking out the previous lows and actually about 15 cents away from some pretty good support though as well. So first of all, on corn, not a whole lot of news on corn. Very range bound. Your $4.75 to $4 in May corn. What we have seen over the past couple weeks is that the money managers are reducing their position in corn. I think they were down last week. They were down to 50,000 contract long. So really reducing down from that substantial long that they had before. Also, we're hearing Safrinha crop is going in very well down in Brazil. I think we're 4% behind the very quick planting that they did last year. So when you look at the 5-year average, we're right on pace there. Now on Tuesday, we did see an S&D report out of the government that kind of surprised everybody. It reduced ending stocks for corn down 50 million bushels, which would be first seen as a bullish sign for corn. But even with that bullish report, we were not able to break out to the upside in corn, and corn then has come over and looked at two macro influences in the crude oil and in the dollar index. So couldn't break out of the range, so the S&D report is behind us, and I don't think a whole lot of people were paying a lot of attention to it. We were kind of anticipating there's more attention towards the end of the month at the planting progress as well as the quarterly stocks report. But once again, that higher dollar we're seeing starting to have pretty good influence over the imports. And corn, our export sales export sales this week on Thursday were well below the range that traders had expected it to be in. Now, that export sales number is from the previous week. Now, that previous week is the week right before an S&D report, and typically you have a lot of buying just in case it is a bullish report. There isn't any interest from outside countries right now to be buying corn. Our basis is softening up, and Ukraine is really putting a price drop out there and really undercutting prices. So with our higher dollar making everything out of the Gulf a little more expensive and Ukraine really undercutting the world prices, we're seeing corn come off. Plus, and this is rumor-wise, we're hearing that South American corn pencils into Southeast United States in that October-November time frame. And we've heard that there's actually been a couple cargoes that have been booked in that time frame. So competing worldwide, we're not really seeing that export business, and we might not see it for some time here. In beans, we were down substantially on the week. Let me take that back, 10 cents for the week, but making some lows out there, taking out last week's some lows as well. Couple things were thrown at it at the beginning of the week. You had these truck blockades in Brazil. Everybody was worried about Brazilian ports getting beans. Well, they got the beans and they're exporting, and there's no hiccup in them getting beans out of Brazil right now. The other thing was, well, Argentina is not going to be able to sell because they're taking this 3-day grace period from selling any kind of agricultural products. Well, Argentina's not even really harvesting any beans quite yet, so it's kind of a moot point at this time. What we did see, though, is we saw the real go to a ratio of 3.26 real to the dollar, which is the highest ratio since I think the top number was 4 some years back. So it's really encouraging the Brazilian farmer, whatever he's selling, because in Brazil, it's with that type of ratio versus the dollar, it's like he's selling 13 and a quarter or $13 beans. So he's very encouraged to sell right now and get rid of his supplies. The other thing that we saw on beans was that our exports were well below estimates as well. Once again, the dollar's becoming involved in that. The higher dollar is definitely creating a better ratio for real versus the dollar, and that's kind of sinking or adding to the bearishness in the soybean market. Now this weekend, it was kind of interesting, though. You thought there might be a little bit of a bid just because you do have this day of unrest in Brazil on Sunday with protesters and such. Still something to watch out for, but if that goes through with no hiccups, I look for some continued weakness in this bean crop. It has really, with the way that corn and beans acted this week, it has taken a lot of traders by surprise who are anticipating a nice little rally to the end of the month to see what those planted acres were. That has not been the case. So we have caught some people long, and caused them to get out of their long positions. As far as wheat's concerned, wheat's bouncing off a 30-cent drop, and basically what we're seeing over in the wheat market is a short covering rally. There's a little bit of anxiety over winter kill and dryness in the plains as well, which possibly could be taken care of over the next couple weeks. But for right now, that anxiety kind of caused a little bit of a short covering rally. In the cattle market, what we're seeing is here in Iowa, we saw 162 cash this week. Higher than last week, but this cattle aren't to be delivered for about 2-3 weeks out. So they don't need immediate supplies. They don't have to be too aggressive with their bids. Big difference between April's and where cash is, but April's are nowhere near going off the board yet. Plus, we're starting to see that box business kind of come off a little bit. Boxes were down substantially here today again on the morning trade, down $1.91. And the biggest thing too is you caught choice was 52 cents lower than select. So that tells you that those prime meats are not really being sought after right now. Also keep an eye on hogs. Look at where hogs have gone for the past week. We've made new lows in hogs, and that's just kind of pulling all of the livestock complex down. Kind of interesting too that this was all done in a week where we heard about the bird flu going through Arkansas and into Missouri and everything, and possibly affecting butterball turkeys and Tyson's poultry as well. So you'd think that there would be a bid for the other meats out there, and it just did not happen this week. So cattle are going to close lower for the week, as well as hogs will too. As far as the Dow is concerned, Dow's softer again this week. What we're seeing is some pretty soft economic data from the February timeframe. Very cold conditions, very snowy conditions in February, and that's caused some of these numbers to come in a little bit weaker. These headline numbers, though, just for 1 month being weaker than what we were expecting, doesn't seem to set the Fed back from the notion that they want to go ahead and raise rates in the June timeframe. That is something, too, that we're going to want to watch next week. Next week's probably one of the most important things is going to be the FOMC meeting, so we can see what Fed policy is still, if it's keeping the same track, if they have to be patient, or if patient is removed, which might signal that June rate hike. Also, we're seeing crude fall off as well, and that has a little bit of a weight to the overall economy. You're seeing it fall back to its lows. I think the last low in April was 44. We're around 45 today. You're still producing too much crude to find storage for, and if you can't store it, you got to dump it onto the market, and that's kind of something that might be happening down the road. So weakness in this crude market looks to extend down the road. So that kind of wraps up what we traded this week. Looking forward to next week. I want to see what happens on Sunday with this day in Brazil's, those protests, see if they block any kind of agricultural products or not. I want to see what the Fed has to say next week. I believe it's a single-day meeting. I have to check on that. Plus, next week we're going to get some private parties estimating planning intentions out there. And the overall view is about 86 million beans and 88.5 million corn. So we'll see how far off these private estimates are for that. So that is all I have for the second week of March. End of broadcast.